Good afternoon, everybody. What we are going to do is we're going to cover the S&P 500, and basically what we will be doing is a daily here, and we're going to be going back in time where some of these rallies had happened in the history of the S&P 500 and indexes in general. 1996, we had a big breakout back in the days, and we were there every single year. But the expansion from 96 to year 2000 took a big nosedive, and it did. And 1999, year 2000 in March, bam, we made an all-time low over here with Mr. Bush, who was president at the time. And once again, the key factor is, my friends, we're talking about expansions. We're talking about economic expansions in our economy. And why is it every time that we have these great expansions, they always fail? And stimuluses were used here, and every time that we used stimuluses, um, everything went back. And everybody remembers year 2008. And basically, what I want to tell everyone right now is, being an expert with bull and bear trends over the last 35 years, we certainly know what we're talking about now. From this very bottom, right up here to 2015, this was a major top. Our U.S. economy is not doing well. It is not. And when we do have the next big downside with these yearly bull and bears that I'm telling you, um, there's going to be an extreme downside move once again. Listen, our economy is not strong. This is well over 2009 to 2015. We're 7 years into this, and our full workforce has changed. The whole financial services industry has changed. The manipulation, high frequency computers, um, bull and bear, short squeezes. So the big short sellers, they lose money because when stocks go up and indexes go up, they lose money. The bull raids the bear, and the bull loses a lot of money and whatnot. I'm just going to say one thing. I'm saying that the economic forecast does not support this. Now, having said that, between 96 to 2000, 2003 Iraq War, straight up, and they all came straight back down. Now, let me just tell you something. This diagonal trend line here, nobody would have ever thought that um, the manipulation, when it caught up to the market, as it always does, would ever go back to these 1996, 97 levels. And when the day trader came in, and there's a whole history of that. So all I want you to know is that bears and bulls and the manipulation is that here is how we started out 2016 as we did on the S&P. We came down here. We had a huge sell-off that these markets have not seen. The bear was definitely in control. And now here we are at 2082, which is the major support and resistances. That's the major resistances, and we can see those support levels. I'm just going to drop this right up here, and I am going to say that the next wall of resistance is going to be at 2110. 2110 by 2113, and that the big moves that we've had the last couple of days on the S&P was a bunch of short sellers, that this whole rally has been done on extremely lower volume, and the short sellers are losing a lot of money because the bears have to buy the positions back. So I don't see a commitment whatsoever on the buy side volume. Granted, we're above the 10 and the 20-day simple moving averages, and bull and bears have the same way, but this is not a high volume bull. No. Short sellers, almost all of this move, when the short sellers were in control down here, they started getting short squeezes, and so they were losing extremely a lot amount of money, and they have to buy to cover the shorts to get out with their losses. The monthly moving averages right here, the monthly moving averages on the monthly now, I'm going to give it to you right here. The red line, that monthly moving average is 2037. The blue line is a 10-month simple moving averages. So it's very important for you to be advised herein is that when we went straight down from the January gap down, right there, there's the low. We went below all the key 20 months moving averages and the 10-month moving averages and 20-month moving averages, and here we are right here on this monthly chart. And I just wanted to give everybody some history that we will be setting up for the next biggest down move, and that this monthly chart is very accurate, and the short sellers on low volume for the month of February. And here it is. Um, this was on 3/1 that we actually put in a move where the top was at 2072, and here in April we're up here at 2083, and we're above these monthly moving averages, so the bull has definitely got the upper hand right now. All right, here on the daily you can see that the upper end of that trend line, we're hitting it hard. And basically, when we go back here on a daily, just so you can see it, I'm going to make it very clear. Right here is where we started with that gap down. Double bottom history, bear market, stocks are dropping 20, 30% off of their highs. Listen, the way that high frequency algorithmic trading programs that are used with supercomputers, the shorts have been wound all the way out. Listen, I can say that this will not be sustainable, and that the short sellers on low volume has been all of the movement down here at this double bottom movement. The whole rally is based on short cover rally, and the shorts cover. They, the indexes has gotten back up here in the last 2 days, and there's a problem with these markets. We got earnings season. Look at the bull ran 2 days in a row to that major resistance line, and I showed it to you on the monthly as well. And that is the problem for the bulls. We don't have an expansionary economy.